Yes, candle formations are part of what you need to trade profitably. But you need to understand why Europe is falling at a particular point in time. In fact, if you don't want to, if it started that you don't want to know why gold is falling, you only want to take advantage of the falling, and that will take you back to the number one rule of technical analysis, which says that price will only be dropping if the fundamentals are bearish and supply bigger than demand. Analysis is key. As traders, we need to understand all of these things, and we have to do our own job. We need to do a bit of work. When you look at asset management firms or banks, when we talk about fund managers, you look at their research department, they have a whole lot of people in that research department who will research the market and do analysis about a particular instrument. Now, for traders, the job is difficult because only one person cannot do the research, or you don't even have all the necessary tools to do the research. But the idea is this: traders can trade as a group. 2-3 people can come together as a group, analyze the market together, reason together, and be able to take position in the market. Analysis is a major thing that traders need to focus on. If you go to our website, we provide analysis. When you go to market analysis, exclusive market analysis by HotForex, to provide analysis to traders. You need to know why you are buying a particular currency. Another reason why traders cannot stay in trade is because they don't know why they are buying or selling. If you know why you are buying euro against the dollar, you will be able to stay longer. You don't need to panic if you understand why you are buying a particular instrument. But when you don't know why you are buying gold, for instance, of course you are going to panic when you see a little retracement. But if you know why you are buying, if you know that the fundamentals are actually supporting a bullish market, you can stay longer in your trade and make more money. It is not about how many trades you are taking, but how much money you take on each trade, how much you lose on each trade. So one of the key issues that traders have to focus on, you need to learn how to analyze the market. Okay, there are websites that can actually support you with information about analysis. You can check forexlive.com. Hello.
Yes.
Okay. If you go to let me start with HotForex. If you go to hotforex.com and you go to tools, hotforex.com, click tools, then you will see exclusive market analysis. You can read our market analysis. You can also go to forexlive.com to read analysis. You can go to EFX News, EFX News, EFXnews.com for analysis.
EFX News.
EFXnews.com for analysis. forexlive.com and hotforex.com.
Okay. You have taken that.
Now, when we want to look at this market, I want us to look at the issue of the Brexit, Britain coming out of the European Union. We saw what happened to pounds. Pounds fell sharply. What was responsible for it? Can somebody tell me what was responsible? Why did we saw that sharp falling? Why did we see it? We saw a sharp falling in pounds, and why did we see that? Can somebody tell me?
Yes, somebody. Why did Brexit weaken pounds?
Because Britain decided to leave European Union.
Says because Britain Okay.
But what is the why should the currency fall because Britain is leaving the European Union? Why should it fall?
Why it falls? Based on the votes that they took. So the decision for the people to leave has increased. That is the mean the people that said I should stay. So it causes the fall.
Okay.
Somebody.
That is the vote. Yes, people voted that Britain should get out of the European Union, but there is a reason why pounds was falling. Pounds was falling because investors believe that such a decision will be dangerous, will be detrimental to the British economy. Now, if investors should think that your economy will be in trouble, do you think they want to keep their money within your economy? If I think that the British economy is going to be in trouble, I don't want to keep my money there. Even if I want to keep my money in that country, I want to cut down on my risk. So if I have like 100 million pounds invested in bond in the UK, I want to sell part of it and move my money out. So what that means is that there will be more supply of pounds in the market, because when you sell your bond, you're going to collect pounds. Now, for you to get out of the British economy, for you to take the money to maybe Japan, or you want to take the money to America to invest, or you want to take the money to China, you have to sell that pounds, because you are not going to take pounds to America. You have to take dollars to America. If you want to go to Japan, you need to buy Japanese yen. So there will be, you can now imagine a situation where a lot of investors are pulling out of that economy. You have increase in the supply of pounds, and that is why the pounds was falling. There was massive selling of pounds. So it is not just about the vote. The vote is one thing, but the interpretation, the investors, we're talking about the order flow. The order flow that was created because of that vote was a supply order flow. On the part of pounds, the supply for pounds was increased. And we said before, for price to be, whenever we see price falling, it is because the fundamentals are bullish and supply must have increased more than demand. We cannot be able to analyze the market if we don't understand the basics. A currency is not falling on its own. There are factors, there are variables. You have to look at the market from the perspective of investors. What are the investors seeing in the market? Are we saying that investors are looking at putting more money in that economy? Or are we talking about investors pulling out money from an economy? Let me give you another example. Within the last 2 weeks, we noticed that AUD USD has been going up. New Zealand USD has been going up. Do we know why?
No.
We don't know why. Because there was an improvement in the Australian economy and the New Zealand economy. In fact, China was also getting better. And if China is getting better, China is a major partner to Australia and New Zealand. Now, when we look at other economies, when we look at the European Union is talking about more stimulus. Britain is talking about more stimulus. Okay? America is holding on increasing interest rates. The Canadian economy is not doing well. So, which economy is actually doing better that investors can take risk with? It was the Australian dollar and the New Zealand dollar. The yield, when we talk about yield, we are talking about the gains or the interest of bonds. The yield in Australia and New Zealand was better. So investors were putting more money. As they were putting more money in that economy, they will have to go to that economy to invest using the currency of that country. There was an increase in demand for the Australian dollar, and the Australian dollar was gaining. you can do all of this analysis even without looking at the chart. I can buy and sell a particular currency pair without looking at the chart. So you have to start learning the combination of the two. You have to combine technical analysis with fundamental analysis. You can't continue to dwell on the technical analysis alone, because even the technical analysis that we're talking about, we do not understand it the way we should yet. A lot of traders don't understand, like we just did right now.
Yes.
We've been trading technical analysis, and we did it through the 3 rules of technical analysis. You have to understand analysis for you to be able to make money in this market. Hello? Now, the second thing that we need to understand is the issue of risk management. A lot of us, even at this stage, we see traders trading without stop loss. This is not appropriate. It is not advisable. It is not the right way to go. If you want, the first rule is for you to keep your capital. Okay? Because if you lose your capital, you have to go out and look for more money. If you put $500 and you blow it, then you have to look for money to continue to do business in the forex market. We need to understand risk management. We need to understand margins, margin call, top-up levels. All of these factors are very important to trading. If I may ask all of us here now, what do you understand by margin? What is the reason for margin and leverage in currency trading? Can you tell me the effect of leverage on your account? Hello?
The effect of leverage. Someone can.
The effect of leverage on your account.
Anybody?
Anybody?
Effect of leverage on your account.
Effect of leverage on your account. Or the importance of leverage on your account. Why do we need leverage? We don't know.
We know, but we don't know how to speak it. Or what?
Okay. Now, you see, leverage determines your margin. Leverage determines your margin. For instance, if your leverage is 1 to 100, when you open a position of one lot is 100,000. Let's say we are trading USD JPY, and we open a position of one lot. What we are saying is that we are buying $100,000 if we are trading USD JPY, and the leverage is 1 to 100, and you are trading one lot. You are simply saying that you are telling the broker that you are buying $100,000. Now, if you are buying $100,000, you don't have $100,000 in your account. So you need to contribute a portion, a percentage of the $100,000 to do your transaction, to be able to execute your transaction. Now, that contribution is the margin. The contribution is the margin. For 1 to 100 leverage, it means that you must contribute 1% of that transaction. If your leverage is 1 to 200, it means you must contribute 0.5% of that transaction. For instance, if you have a balance of $1,000, okay, a balance of $1,000 with one lot transaction, you will not be able to use 1 to 100 leverage, because 1 to 100 leverage will consume your entire balance. Are you with me?
Yes.
Yes.
All of these things are key issues in currency trading. In speculative trading, you need to understand the implication of risk. Let me tell you this. The number one reason why people lose money in currency trading is leverage. The number one reason why people can get their account wiped out is leverage. Leverage is the reason why you can have your entire capital wiped out. If you understand the effect of leverage on your account, you will be able to manage your positions and be able to protect your margin level. The margin level is what determines your stop-out level. Do we understand stop-out level?
Yes. Do you understand?
Stop-out level?
Oh, if you don't know this, yes. That's why we are here.
Yes. Well, you understand?
Yes, sir.
Okay, good. It is your job as a trader to protect your margin level. If your margin level is dropping in currency trading, you need to understand what your margin call is and what your stop-out level is. It is not advisable for you as a trader to allow your margin level to drop to 100%. The situation where your margin level is around 100% is dangerous for your capital. Everything you see within the terminal when you are trading, these are critical components that you need to study as a trader. Traders are losing money because of some little things we don't really bother about. We don't consider these things as important. All we are looking for is just the strategy to give us 100%, 200%. But we need to manage our risk. As traders, risk management is essential. So we are talking about market analysis, risk management, and lastly, we need to also talk about our goals and objectives. What is your expectation about your trading? Do you want to make 50% a month? Do you want to make 100% a month? If you want to make 50%, 100%, 20% a month, do you have the skill to make 20%? Do you have the strategy to make 20%? If you have a strategy that can only deliver 5%, but you are using the same strategy to go after 20%, you are looking for trouble. Your strategy is not the only thing you need in the market. You need your strategy, you need your skill, and you need the market itself. The market alone can. Hello?
Don't mind you.
Okay. Now, the market is a major factor. Where the market is not trending, you need to adopt a range strategy. You cannot adopt a range strategy for a trending market, and you cannot adopt a trending strategy for a ranging market. So you need to be able to get a strategy that can do well in the market at every point in time. So if you want to be a trend trader, you can decide to be a trend trader. If we cross the major currencies, we have 8 major currencies. If we cross these 8 currencies, we are going to have 28 currency pairs. We have more than enough instruments to trade in the market. It is our job as traders to look for the right instrument. It is our job to look for an appropriate currency pair to trade in the market. Because your strategy cannot do well under every situation in the market. So for a trader, it is essential that we begin to study analysis. It's essential that we begin to look at how we can analyze the market efficiently. I want to give us a website. Let me get. Okay.
Okay.
Hello. ForexTraders.com. Hello.
Yeah, we are hearing.
ForexTraders.com.
Okay.
ForexTraders.com. If you go to that website, you can learn how to do proper analysis in the market. One key issue that we as traders must understand is that to become a fantastic lawyer is not about the school you attended alone. Hard work. You need to do a lot of work on your own. To become a great accountant is not just about the school you attended. You also have to put in hard work and learn. The same thing for speculative trading. Speculative traders are professionals well trained with a lot of hard work. We need to learn. We need to practice. Coming for a seminar today is good. You are given information, you are given websites that can help you, you are given tools, you are given opportunity. But you have to create time to learn and understand market analysis. Believe me, if you are buying euro when you should be buying it, you cannot lose money. If you are selling euro when you should be selling it, you cannot lose money. The major problem is that you need to have that edge. Are you doing what you should be doing?
Sorry.
If we believe that we want to succeed in this market, if we want to make money consistently, the question we need to be asking ourselves is this: why do we make money sometimes and lose the money back to the market? It is because we are not doing the right thing. We don't even know what we are doing. We make money last week, we cannot duplicate it this week. We don't have a definite strategy. As a trader, we need to create our own strategy. The strategy that will go with your temperament. If your character is about long-term trading, you need to find a strategy that will help you to do long-term trading. If you have a temperament for scalping, you need to find a strategy that will help you do your scalping. For instance, I cannot scalp. You see me scalping. I don't have the temperament to scalp the market. But I can open a position and leave it for 4 weeks. That is how I trade. So you need to find a strategy that will suit your temperament. One of the things traders should try, Mr. Aban.
Yes, sir.
I believe we might need you in that area. Since you are on ground, you are close to our people, traders need to be able to create a trading plan.
Okay.
Traders must be able to create a trading plan. What is it that you are looking for in the market? What is it that you want to see before you click the buy and sell button? There must be something you are looking for. There must be something you are looking to see before you want to click the buy or the sell button.
We can call it a checklist.
A checklist. So this checklist should be developed based on your strategy. If you are a trading, if you are a trend trader, you need a trading plan that will help you to identify trends before you click to buy and sell. All of these are essential things. For a trader to become profitable in the market, it requires work. I'm not going to deceive you. I'm not going to try to tell you that this is very simple. Currency trading is simple because anybody can click buy or sell button. But currency trading is not easy. You need to be able to sit down, look for the right currency to trade. You need to be able to analyze it. You need to be able to calculate your stop loss. When we talk about risk management, how many of us do position sizing? Hello? The concept of position size, do we understand it? Hello? That is another part of the risk management. Position size.
Position size.
On a trade. Position size. Position size.
Okay.
Most of us, when we want to trade, our major approach is to say that, oh, I'm going to buy with 0.1 lot. I'm going to sell with 0.5 lot. That's